Welcome everybody and good afternoon. My name is Mark Robertson. I'm founder and managing partner of Manifest Investing. Welcome to this session where we're going to take a look at one of our subscribers' favorite features, that being the screening tools that we use and some of our favorite places to go hunting for ideas. This one will be a little bit different from the other sessions, so we're a little more theory this morning. This will be a little bit more hands-on, actually demonstrating some of the things that we look at, some places that we turn to as we search for ideas for stocks to study. And as you know, with any screening application, you really do have to treat the discoveries that you make as the first step of a study process. I mean, I very rarely would ever act on the results of a screening without auditing and verifying and all that kind of stuff. So we'll spend some time with some of our favorite references and sources of ideas, and just basically talk about the concept of screening in general and kind of take it from there. On the cover slide, you can see our guy tossing the darts. And we do tend to think of it as we don't want it to be darts. We want it to be kind of a laser beam focused situation where we're out there searching for very specific opportunities, very specific things that fit our portfolios. In fact, that's probably one of the strengths of the modern stuff going on here over the last 15 to 20 years is we don't have to, some of you probably remember the days when you would go out and you would find a stock to study, and you would study other companies within the industry, perhaps do a stock comparison guide and end up buying something else. Well, now we don't have to use that shotgun approach. We can actually go out and say what's important to us and actually go out again with a very targeted focus and seek to acquire that sort of thing. A little bit of a tribute there to Johnny. Few have ever done it better, and Mr. Carson is there on the right in his role as Karnak the Magnificent. And again, we're going to treat this as not just screening from a general standpoint, but again, putting the pieces together and being attentive to what portfolios need. I mean, as we go out there shopping in the world of investing, buy and hold can be different depending on the stock and depending on the investor. So we just acknowledge that and take it from there. All right. For our final session of the day, just a quick reminder that no investment recommendation is intended. We do this as an educational demonstration. If we do unearth some ideas here, again, we urge you to go out there and, like we say, trust but verify. Everything we do is for illustration. We're going to demonstrate some of our favorite techniques and resources for finding ideas. But again, do your own homework and consider this an educational demonstration. All right, let's kind of take it from here. What are the most important success factors in portfolio design, and how and for long-term investing, and how might it relate to, or how might we put it to work as we implement a stock screening process? And here's my answer. I basically think that it comes right back to the two major characteristics that we think are important for any stock, and that are the return forecast or the return expectations, and this notion of quality or investment grade. So if those are the two most important things, it just seems to me that we should be trying to find screening resources. And I'm a little bit biased here because we obviously serve these needs, but I kind of counter the question and the answer with a question. Where can you screen for opportunities that are based on what's really important? And the answer is not very many places. There's a lot of free screeners out there, and some that are not so free, that really don't, I mean, why screen for something like beta if it's not that significant in our implementation of long-term investing? There's a variety of other things where you can screen on, but what we think is really important to be able to screen on is the return expectations and the quality and some of the other background music things there. So, you know, why would you waste time and effort anywhere else? I mean, even if it's free, would kind of be my outlook on it. So when I think of screening, I think of it in terms of being very results-oriented or results-based. What result do we actually seek? Well, we seek to find companies that are capable of delivering superior returns, and we want to study and focus in on the leadership companies. So we're interested in the stuff that we tinker with in terms of screening and searching for ideas and things to study. Second opinions, sounding boards perhaps to help with that trust but verify process. So that's pretty much the way we think of this entire process. Now, I'm actually out with a fairly controversial perspective on this. I think watch lists and pounce piles are kind of a thing of the past. And I have some license here because I don't know, I may be the person who came up with the term pounce pile in my work back in the early 1990s with the Chicago chapter. You actually see a research zone article here where the reference to finding a pounce pile. And what a pounce pile was basically you would go through, back in those days, you would go through and you'd do this stack of stock selection guide based studies, and you'd be like 15 deep in these things, and maybe 8 of the 15 were actually very high quality companies that you would have been interested in if they had been in the buy zone or had been attractive from a return standpoint. But literally you always had this almost, in fact, I used to keep an index card or a note card in my shirt pocket of companies that I thought thought of as being in the pounce pile. And the pounce pile again was this collection of high quality companies that I would have been interested in if they ever went on sale. Well, really times have changed. I mean, first of all, very few watch lists that I'm familiar with, unless you're using dashboards, really are that well maintained. A lot of times the information on them is stale, and it's just a lot of work. And I would just argue, and hopefully can demonstrate that here in a few minutes, that maybe that concept is a little bit outdated. It certainly is for me, in my personal opinion, and certainly in my own attempts to implement an intelligent approach to this sort of issue. Let's talk a little bit about, again, this notion of discovery of opportunities, and as we've talked about here all day long, this differentiation between, the average investors out there in the world of investing that are basically operating on hot stock tips from brothers-in-law and all kinds of things, and how we basically set ourselves apart by building, considered reasonable expectations for the companies as we go shopping for companies and as we build out our portfolios. And what I've listed here are some of my favorite resources. Obviously, my #1 website is on top there, Manifest Investing, and Value Line second. And really, those first two, with a little bit of a nod or a nudge to the third one, those first two are the only places I know of where you can search based on, do your stock screening based on this notion of a return forecast. And I really don't know of any other sources out there, any of those available free screeners, including FinVis or some of the latest rages. I mean, I look at some of those sites and just wonder, what are we really doing there? And we're kind of, in my opinion, wasting our time not looking for a results-driven approach. Now at Morningstar, we can also use that. If we find somebody who seems to know what they're doing, we'll demonstrate that here in a few minutes, of digging in and seeing what they happen to be interested in lately. So it's kind of a over-the-shoulders approach. We do have some very favorite resources when it comes to publications. We'll take a look at our Forbes and Fortune favorite lists, and we'll take a quick look at, for those of you that have some interest in implementing or deploying the concepts of momentum and sentiment, momentum indicators, support and resistance, that sort of stuff as it comes to stocks, maybe a little bit of point and figuring actually. But those are basically the ones that I use most frequently. Very rarely stray outside of that area. So those are my personal favorites. This slide we actually talked about a little bit this morning in both sessions as we kind of built it out. What you're looking at here is just a spread of club performance expressed in terms of relative return. I shouldn't say clubs, I should say portfolio performance, whether they're clubs or mutual fund portfolios or whatever, again, over the decades. Now, the red ones are institutions, the rhinos. The red ones are the institutions or the rhinos. Some of our favorite rhinos are on here. You can just barely make out the ones up here at the top. This is Peter Lynch, Fidelity Magellan. This is Walter Schloss over here on the right. Warren Buffett and Berkshire Hathaway actually end up pretty high up on the chart. This is Ken Hebner, not labeled, but that's Ken Hebner right there at CGM, whatever. But there's just a whole bunch of fairly interesting investment clubs. that have come in at very superior returns. By the way, 10 Cup is up at Magellan type levels over the last 17 years. So again, putting in context of what do we go looking for, what do we go screening for? Well, again, my answer to that question is, well, we're shooting for returns that are at least 5% better than the market on average, so why not go shopping for stuff that is raising the probability that we might be able to end up in that zone? I mean, it's that simple. We're trying to end up in that zone. Why in the world wouldn't you search for companies that seem to be more likely to put you there or help you to end up there? So it's kind of for me, it's kind of a duh moment. It's, I mean, I want to go out there and I want to find companies that are basically in this range, perhaps not too high, because you start reaching too high and you begin to speculate a little bit too much, but certainly in the bottom half of that range, that's what we go looking for. Second thing we know is urgently important when it comes to long-term performance is to consider the quality of the company or the investment grade. So I think we want to be able to search for that type of thing. Now, you certainly could do that by some type of coding or looking for these type of characteristics. You know, for instance, at Value Line, you can screen based on financial strength. We'll demonstrate that. You could actually filter that by looking at the earnings per share predictability, and can certainly screen on some of the growth and profitability forecasts or projections at Value Line. I kind of like the notion of screening for, or compiling them all into a factor and screening for that, and that thing known as quality. And we do try to find companies across the spectrum leaning on that green and blue end of the spectrum there. Third, and probably equally important, we know, and we covered this morning, we know from watching the Value Line arithmetic average, the all of the above index, that we can avoid situations like the lost decade by making sure that we are investing in a blend of small, medium, and large companies. And that's basically what we're looking at here. The performance advantage of investing in small, medium, and large companies kind of speaks for itself. All right. Ann Newman is asking a question: do you have to have a paid subscription to do screenings on Value Line? Yes, but that paid subscription can be done through the form of a library subscription. I'm going to be using my institutional account here in a few minutes for it. You can actually, with the Value Line library card situation, which many libraries across the country are institutional subscribers to Value Line, you can go to valueline.com and actually run screening. It won't be exactly what I show you, but the concepts will be the same. So you do have to have a subscription, but again, that can be through the library. So it's not exactly free. It's in your tax base, but it's there. All right, so again, we want to be able to screen and find companies that satisfy our hunger for fast-growing companies to balance with our slower-growing companies and then everything else in between. So again, from the concept of, if I'm going shopping, I kind of like to have some guidance or a shopping list or some type of guidance as to what I'm out there shopping for. And I think we can provide that. So in summary, I really do think that pounce piles are a bit outdated, perhaps even a little bit obsolete. You really want to be out there searching with the best available information as fresh as possible. Can put it in a sports analogy of either baseball or in the spirit of this weekend, the NFL draft that's going on. And why not get out there and try to find the best available company that will, fit your portfolio well and make it better. And the hunt really should be for what the portfolio needs. I mean, as an example, this past Tuesday we were looking at an investment club in Dashboard Diagnostics that had, I believe, 50 to 55% of their total assets invested in the technology sector. So for them, going out and searching and leaving technology out of the mix was probably not the worst idea in the world. I mean, they wouldn't have wanted to discover yet another company to tempt them to go even deeper. So again, the hunt probably should be for what the portfolio needs, so the screening tools should also have that. So we'll basically now take a look at a StockSearch and then other places of ideas and other screening examples. And again, invite you to participate. I'm watching for any hands going up in the air if you have any questions or need to slow me down. I'm going to basically jump through a couple of instances of some of my favorite stuff to do here. Going to jump out and go over to, not there, over to Manifest Investing, the regular website. And then I'm gonna start with my absolute favorite, and it's the simplest screen, and this is why I no longer carry the index card in my pocket, because at any point in time I can come over and click on StockSearch. We're taken to a fairly simple, dirt simple but powerful screening tool where we can go in and sort on a screen on a variety of criteria, ranging from sector or industry. Could certainly search in those areas. Could search by companies within the sweet spot, which right now on the upper right is between 13 and 18% roughly. So 13 to 18%. Can search within whatever return forecast range you would like. Can search by quality, financial strength. This growth would be the top line growth forecast. EPS stability, if you like straight lines on your guides, the straight actual results and forecast stuff, the EPS stability can be high for that. An example of high might be 75 or 80 as a minimum. That will keep your picture pretty good on your visual analysis. Projected yield, if you're out there attempting to invest in a little more conservative situations, maybe a little bit less growth and a little bit more dividend yield, you can certainly search by that. We put current price in here to eliminate the penny stocks wherever, if we're in the mood to avoid those. As many of you know, I typically won't invest in companies under $10 that have any debt. I've learned a few lessons the hard way. And then this is the one I'm going to use here in a minute, Manifest Rank. The Manifest Rank is a combination of those two most important characteristics, the projected return combined with the quality into basically an aggregated factor which we rank from 0 to 100. So 100 being the best combination of the two. The thing that we do that toss a little bit of a wrinkle in it, we penalize companies when their projected return forecast goes too high. So if a company has a return forecast of, say for example, 50%, we will penalize them and drop their rank. So that's just to help us avoid temptation. The CAPS references that you see down here, the CAPS stars and CASPI, are both references to the Motley Fool CAPS stock picking game or experiment. Fascinating stuff here. We basically use that when the spirit, when we're inspired to want to maintain or check in on the interest levels or the sentiment behind some stocks. Norm Chemnitzer says, do you consider the best debt ratio in your selection? Do you consider the debt ratio in your selection, and can you screen for it? At this level, what we do, we'll actually see that in value line here in a few minutes. My first level answer is no. When I'm at this level of screening, I basically can consider, when I'm at this level, the financial strength rating is all that I need. The financial strength rating includes things like the value line financial strength rating, the Morningstar financial health. We do have some consideration for debt level. We also look at effective interest rates. So we do factor some debt-related characteristics right into the formation of the financial strength rating. So I will use it in that regard. I would probably use it, once I got down to a list of candidates to kind of walk through them. Ann Newman wants to know that what CAPS is. Again, CAPS is something done by the Motley Fools. And in fact, if you search on CAPS, let's go ahead and demonstrate a quick search. Quick search. If you're interested in that sort of thing and you see something that you're not familiar with, if you click on search, and I think we'll probably be all right with just CAPS. See what we get here. You can see the definition is showing up over here on the right-hand sidebar. CAPS is a stock picking community sponsored by the Motley Fool, et cetera, et cetera. And then you can also look back at articles, like it says here for CAPS Intensive, and you're talking about some screening stuff. In fact, what I'm about to talk about is covered right here in this old article. All right. So again, searching for almost any term, especially if it's a term we use that isn't used in general by much of the investing world. A lot of times you can find answers to those type of questions. Okay, just as another example, just real quick, if you type rhino, if you were here this morning and wonder why we're talking about rhinos, here's the article, Rhino Investing in Corrective Lenses, that will help you understand why we are so affectionate about the rhinos. And then over here on the right, the glossary results actually give you the definition of why we refer to the Wall Street institutions and analysts as rhinos. Again, a term of affectionate endearment, and I mean that. All right, so back to the StockSearch. Going to show my favorite one. I refer to it as the Ivory Soap StockSearch because I enter just one number, 99.44. That's the purity of ivory soap. What this is going to give us is the top half of 1 percentile of all stocks based on their projected return and their quality rating at manifest. So just entering that single number, hitting search, at any point in time, this replaces the note card in my pocket. And what you should get, again, is 15 or 16, depending on how many companies are in the database when you do it, a fairly interesting list of companies that some of them are a little bit frisky, a little bit speculative with the higher projected returns. But again, the ivory soap screen, just remember it by that purity thing of 99.4, and this is always at your fingertips. So I haven't used my note cards for pounce piles in quite a long time. And there's some really nice study opportunities right on that list. I don't see any company that reaches out as being terribly unusual on that list. Linda Schuler says, I've noticed that the projected yield differs from the current yield. It definitely does. We pay more attention to the projected yield because that is the one that would factor into the return forecast. For some companies, she says, does the projected yield come from the future side of the value line page? Yes, it does. I mean, sometimes we'll audit and adjust those numbers, but for the most part, you'll find that the projected yield number is going to be the long-term 3 to 5 year projected yield according to value line, and that will be different in many cases from the current yield. Okay, so that's a demonstration of the ivory screen. I think what I'd like to do next is go back to our home page and just demonstrate the concept of relying on yourselves for research. And what I'm going to do is go to the dashboard that is published as the Manifest 40. These are the 40 most widely held stocks by you guys. And if I were looking for companies to study, I would come here to the Manifest 40, click on the projected return column, which is going to sort it from highest to lowest. And again, these are widely held. That says nothing about whether or not they're in favor right now. But if you actually go back to the Manifest 40 and look, you can find out, who's been moving up the chart. This was incredibly useful here since 2008 as you guys were accumulating Apple hand over fist. And we could actually watch that happening. BioReference Labs is another one that you guys have accumulated pretty aggressively over the last couple of years and been, at least so far, rewarded for it. So, I mean, go to the Manifest 40 right from the home page, sort on par, and then just kind of go down the list until you find something that speaks to you or perhaps fits your portfolio attractively. You'll notice that there's a lot of technology up at the top. Technology seems to be well positioned. Be willing to have a bit of a roller coaster. It seems like every summer technology gets dinged up a little bit, but it's already been dinged up already, driving some of those prices down, and return forecasts up. So just something to think about. I noticed that Infosys Technology took quite a hit here lately, and might be worthy of even further study. So that's the Manifest 40 and how you might glean that for things. Let's go ahead and talk about a website. One of the ones that we like for smaller companies, a lot of questions that we get from you guys is, how do you find smaller companies? This is one that many of you already know the drill on this. You've been part of what we do on this on the Forbes list for years now. And this is free. To go to Forbes.com, we use the Forbes.com list that comes out every year around Halloween. If you go to lists and just click on lists, they love their lists over at Forbes. And it's been a while since I've been here. It might take me a second to find it. The best small companies are here somewhere. I saw it. Hold on. There we go. America's Best Small Companies. Clicking on that. And again, this feature comes out about every Halloween. So you can kind of think about that. And you could actually scroll through and take a look at some of the companies that are featured there. They apparently have a top 20. They actually have 100 companies listed. And every year, I'm going to go back to Manifest Investing now, go back to the home page. Every year, a group of us kind of gets together, huddles over them on the forum and a few other places. And you can see the results of our work here. If you go to Published Dashboards, and again, we're talking about this is a form of screening. I'm going to click on More so I can go to Published Dashboards. And then if you get over into the Published Dashboard, you'll see a lot of them belong to myself or Ken Kavula, perhaps Cy. And what you see down here now, and this is really cool stuff, for 5 years running, you see what the companies were that garnered the most attention from us. So for example, last October, 10/25/2011, we built this dashboard. And $100 into these, or I don't know, there's 16 or so companies there. You can see that $100 invested in solar winds has gone from 100 to 193. So that one's been very rewarding. Price is up, so that means the return forecast, unless they have explosive advance in their fundamentals, which they don't. They have great fundamentals, but nothing that can keep up with that stock price advance. The projected return is actually down in single digits. Notice the Buffalo Wild Wings is also up almost 40% since Halloween of last year. Their projected return is also a little bit subdued because of the advance in price. At the other end of the spectrum, Carbo Ceramics, again, I can't see anything materially wrong with the company. They are involved in fracking, so that's controversial. They're down 27% because they're down from $100 back in Halloween, and they continue to look pretty good. All of them are hanging in there on quality, so we find that kind of interesting. Just for kicks, we'll go back and take a look at the companies that were featured in 2007 by clicking on that, and this is where it really gets kind of interesting. Some of these may not be updated. There could be a split or something in here, but one of the things I like to point out, anytime we go back and look at some of these older lists, apparently Healthways has either had a split or something gone wrong here, but they're off 90%. Buffalo Wild Wings and DXP Enterprises, which I don't know much about, but FactSet Research, a longtime community favorite. What I'd like you to notice is the companies that have performed very well from a dollar perspective, so pretty good returns over the last couple of years, even with some doldrums in there. Notice the frequency of the highest quality companies being up here at the top. And it's something Ken Kavula likes to point out. We can go back to the list and take a look at 2008. And you'll see that same type of behavior. Persistent quality, with a few exceptions down here at the bottom here, but persistent quality generally means wow. And I mean, you talk about the time to buy smaller companies, fall of 2008, and again, these are the companies, again, that Peter Lynch makes the point that the smaller companies, the faster growing companies coming out of a recession, which they ultimately did, are often the ones that kind of set the world on fire. So these are up hundreds of percent, with a couple of exceptions down at the bottom. Here's Strayer. We talked about that this morning. But again, notice the propensity of the higher quality companies to flow to the top. So quality matters even when it comes to smaller companies. So that's a good way to use the published dashboards on back in our system. Just for kicks, one that Ken Kavula brought to us last year is these Fortune 16 fastest growing companies. So it's not just Forbes anymore, it's also Fortune. And one of the reasons we like this is it's not just what we would call small companies, but faster growing. And we kind of like this feature because we tend to join fast growing and small at the hip. That's how we think of our companies, based on growth rate. And some pretty fascinating stuff going on here over the last several months. In fact, I would argue perhaps even superior to what we've seen from the Forbes list. There's some larger companies on here that are also growing at a fairly rapid rate. I thought Apple was on this list, but it does not seem to be here. Must not have made the list at the time. Okay, so that's just some of the ways to look at some of the smaller companies. All right, so now what I'd like to demonstrate is I'm going to go to my subscription for Value Line. It'll be a little bit different than some of you. It'll look a little bit different, but I'm going to go into the 7,000 companies that are actually available at Value Line. And what you could do is just sort by projected return. We'll look at this in an automated way in a second, but basically start at the top and kind of work your way down looking at some of these. Now, these are elevated, very speculative returns, but what I kind of do is I look at the financial strength at the same time, kind of one eye on financial strength, one eye on projected annual return. And this is like I said, one of the few places out there where you're actually shopping for the results that you're seeking. You know, you're not basically backing into it from some combination of shopping by PE or shopping by growth rate or all that other stuff. You're starting where you're trying to end up. Ann Newman has the question: when you first open a dashboard, how is it arranged? And the answer is by value, as you suggest. It's the default setting is for it to show up first. Let's go ahead and actually look at one. How about Fortune's 10 best for 2012? Oh, that's where Apple actually shows up. They are ranked by default and by value, so they're ranked from descending. Now, you can rank them by clicking on any one of these headers. For example, if you wanted them alphabetically, just click on the company field. If you wanted them by fastest growing to slowest growing, click by the growth category. So by clicking on any one of these column headers, and in fact, probably the most frequent use other than sorted by value is people like to click on quality. Clicking on quality, and now they're ranked from highest quality to lowest quality. So again, we would typically shop at the north end of this list. Okay. The screening we're about to talk about, can you do, Norm Chemnitzer wants to know, can you do this on the free value line or by subscription only? Well, if you have a subscription, you can do it for sure. Again, free in terms of if you access through the library, you will be able to do what I'm demonstrating. It's going to look a little bit different when you go into Value Line. I can't actually access valueline.com because I'm using a different account here. If you go to valueline.com, there is a screening option within the standard edition. So you can actually do what I'm demonstrating. It'll just look a little different. What I'm going to do is actually limit this field. I'm going to use a filter. And what I'd like to do is just toss out anything that has a financial strength rating less than an A. And all I'm doing there is just getting rid of some of the noise. Okay. And then now we'll go back to what we've got here. Again, sorting it from top to bottom by projected annual return. So in the valueline.com screener, you can actually filter by financial strength and projected annual return to do the same thing I'm demonstrating here. It'll just look a little bit different. And again, you do have to have a subscription either through the library, which again is in part of your tax base, or as an individual subscriber to Value Line to do any of this. I would basically look at this and probably ignore some of these at the top. Somebody asked a few minutes ago about would debt ever be a part of it, and you can see here we have % debt to capital from their latest quarter. That may inhibit me a little bit. Definitely would dig in and try to understand a little bit more. But you know, from this list, I'm just generally going to work down, probably going to ignore many of these up here at the top as being just a little bit too speculative for me. You can remove them. We talked about Massimo this morning. Now keep in mind, this is the projected 3 to 5 year annual total return, so it's not the low that we were talking about this morning. This is going to be anywhere from 5 to 10 percentage points higher than what we were talking about this morning. So you have to kind of just make that a mental adjustment. Whenever I see this number, I'm always subtracting from it. So, but any of these companies here could merit further study. So again, at Value Line, you can filter for the highest financial strength companies and then begin searching by return. And that's one of the things that makes Value Line pretty powerful in this regard. All right. Let's go back to Manifest for a minute. Something that we want to demonstrate again from the home page. You know, at Manifest Investing, every single month, every single newsletter, we actually put out a featured stock. Last month was Schlumberger, and we keep track of a tracking portfolio. The companies remain in the tracking portfolio so long as their projected return stays above MyPar. You can click on Solomon Select from the home page, and this takes you to the companies that have stayed in the Solomon Select tracking portfolio since February 2005. In this case, we've had a couple selections of Coach, but you can see that Coach has really performed well. I think Coach is a 2-time selection, so $200 invested in Coach is now worth $605. But again, in terms of screening, these are companies that are still likely to be above my par. And if I'm looking for ideas, in this case, if you click on the projected annual return, some of these get a little bit frisky up at the top. Southwest Airlines is a bit of a special situation. But again, if you identify one of these and you would like to see a little bit more background on the company, let's take, how about BioReference Labs? We click into the company, and this will take us right over to the company page where we can see the business model assumptions. I think I clicked on that. All right, so this gives us the business model assumptions with respect to sales, growth forecast, profitability, and PE ratio. But one of the really neat features is once you're there, you can click on this little magnifying glass, and it will take you to anything that we've ever written, either as a formal article or posts within the forum. In this case, you can see that it's showed up. It has been in the Tin Cup model portfolio on a couple of occasions. We added to it. Here it's in the Manifest 40. Can actually come down to where does it actually show up in the as the Solomon Select feature. I think this is probably it. And there it is from December 2010. It's one of Cy's favorites at the time, so you can actually see what we were looking at the time. But again, just by clicking on the ticker symbol and then going to articles that we have written over time, it's been in Tin Cup for a while. You can also come down and take a look at posts. Here's one by Dan. And this is actually part, if my memory serves me right, yes, it's a post by Dan that's part of a much longer thread that went into a fairly detailed analysis of what does it mean when all the investors in the world out there are shorting the stock. You can see there's a visual analysis. They were shorting it, and we actually went through a discussion of what might happen during a short squeeze. I think we may have seen a short squeeze starting around Thanksgiving and lasting through the November, December, January timeframe. So again, the point to demonstrate is by finding it on the results of going into one of the public dashboards for like Solomon Select. Let's try one more, Roundtable. Okay, on the Roundtable, if we go in, it's not one of the ones listed on the main page here, but if you click on More, and you just page down to where you see Roundtable, here's the Roundtable tracking portfolio. So again, it's going to give you the repeat selections up at the top, and you can see some of the ones that have been most frequently selected for the Roundtable. In these cases, you can actually find the audio-visual recordings of YouTube sessions for some of these companies as you click through them and take a closer look. So very worthwhile. If we go to Oracle, I forgot to screen on return, but you get the idea. Might even be able to find a direct link to a recording. Coming down, I'm actually paging down into where the forum posts show up, and I don't see anything leaping off the page. But you can actually run. Here's a Christmas countdown article. We'll just kind of click into it. There you go. A visual analysis and a little bit of background on the company. All right. Okay, we're about 40 minutes in. Norm Chemnitzer has a question that he's heard instructors say that Value Line is a little conservative in their ratings. Do you agree, or do you think that they are fairly accurate? Probably the best way to characterize this is they are optimistic. I don't know of too many people that would talk about Value Line being conservative. Let me just put it this way. Our research indicates that if you take a look at the value line forecasts versus the actual returns, and we do this on a very continuous basis, what we have found, let me grab a company. What was the company we had this morning? Massimo. If you go into Massimo and you take a look at a longer term situation here, a couple things. The average, like we were looking at a few minutes ago on that screening thing that I was just showing, the average annual return forecast here would be 34 plus 20 divided by 2, or 27. Our research indicates that that is optimistic, not conservative. In fact, our research indicates that a fairly well-conditioned, well-formed study will come in closer to this 20% more often than not. And in fact, that's even slightly high. Is what our research suggests. So not conservative at all. And it can come from a variety of different directions depending on the company. It could be an optimistic or exuberant PE ratio. In the case of Massimo, as we pointed out this morning, this is a company that has tracked pretty reliably at 15 or 16, 14, somewhere in the mid-teens for net profit margin. And when you take a look at value line, they're at 20.6. That's not conservative. Now, they might have a reason, then they could be right about this particular company. My experience has been that that's the type of thing which kind of evaporates over time. And again, what we find is that when you take a look at the aggregated forecast that we talk about at Manifest, we're taking a look at this value line, Morningstar, Standard & Poor's, a couple of different sources, our own stock selection guide, an imputed PE based on the industry. All that stuff adds up to a more conservative forecast, and 9 times, I'd actually say 95% of the time, it's closer to that number there. So, no, I don't consider them conservative. I consider them to be, like most of the analysts on the planet, heavy optimists most of the time, and thank goodness that they are. They'd be really in a bad mood most of the time. They're very optimistic in general, and nothing wrong with that. We're all optimists, or we wouldn't be here today. Let's talk a little bit about those of you that may be interested in the charting side of things. My favorite site for charting and taking a look at a tiny bit of technical analysis happens to be StockCharts.com. If you go to StockCharts.com, come in on the homepage. This is all free. Everything I'm demonstrating here so far is free on StockCharts. What I like to go to is over here on the right where it says links. There's this entry called predefined scan results. Now, I don't find stuff here all that often, but I do shop here every once in a while. And it basically takes you in here, and what we like to look for is stocks that are oversold with an improving relative strength. There's 25 mentioned here. Let's go ahead and take a look. This would be possible studies for buying a stock. Build-A-Bear Workshop, Big Lots, Capella of all things, Ceradyne. There's actually more companies here than I normally see. I tend to ignore the ones that are under $1, sometimes under $10. There's a bunch of noise here, but there are a number of names here that do actually reach out to me a little bit. I find it interesting, and this actually came up this morning also, the number of the Capellas, Education Management. There definitely are some of those education companies showing up. See if there's any more down here. So that's one place to look for. These are for buying opportunities. Again, if they've been oversold and they're showing signs of relative strength, that means they could be under a condition known as support. So that's one thing that we can go looking for. Can also look for what is called a bullish 5,200 moving average crossover. And again, even if you're not into this stuff, these are companies that if the stock selection guide looked good, this might be the type of thing that would be like a tiebreaker. If you had a couple stock selection guides that look pretty good, in this case I notice Oracle's in this mix. So even if you don't believe anything else about the world of technical analysis, just take it on faith that a large number of rhinos use technical analysis, and they're looking at this stuff. They're looking at various forms of this stuff. So if you find that you've got an attractive situation in a company like Oracle or CSX, odds are that the rhinos are running with you. You're running with them. And again, I think of the technical analysis stuff as literally strapping a Garmin or a GPS device on every single rhino out there so that we can tell what direction they're running and at what speed. And that's all the information it offers to us. And in this case, there's a chance that they're going to make a break for these type of companies. Now on the flip side, let's say you're the stock watcher for a company, and if it shows up here in overbought with a declining RSI, it could be a situation where it's running out of gas and might be turning around and turning back the other way. Now there isn't any household name here, maybe posing a little, but notice all these prices are actually in single digits, so there's nothing there to see. But if one of my companies is really been steaming along and just might be running out of gas, kind of think about that Roman candle thing, I will use this as a trigger to take a closer look at it and audit it. By the same token, same thing, just the opposite of what we said a few minutes ago. And by the way, on my talk on Apple that I've given here over the last couple of weeks, I keep talking about this, what's known as a death cross. Well, this is a look at the death cross for the companies that are going to show up here are companies that could potentially be in trouble from a price perspective. Fresenius might be topped out. We could take a closer look at that in a minute. Ticker symbol FMS. Couple other companies here, but again, don't often see a lot of the names. But again, if a company that I'm assigned to as a stock watcher, or if one of the tin cup companies shows up in here, I'm probably going to take a closer look. Let's go back and take a look at Fresenius. And what you're going to see, I believe, is a company that has been chugging along pretty well, probably the stock price shooting up. Well, in this case, it's actually kind of range bound here. And it's kind of trailing off here and kind of flattening out. So what you'll often see when you find one of those conditions met, and this is that crossover, that death cross crossover, this could be a very adverse situation. A lot of people in the community will actually drop down and take a look at point and figure. That's the type of technical analysis that was covered in Better Investing, on the pages of Better Investing. And you can see here there's a little bit of bearishness. And although we don't put a lot of faith in it, a price objective of as low as 59. So this is a negative, and again, a lot of the rhinos use this one. And Dan, I think you're out there. If you have any comments about that, certainly would love to hear it. Let's close with one last thing. I'm going to go back to Manifest Investing. I'm going to go one more time to the home page. Kind of wind down here, go back to the home page and spend one more moment with these dashboards. And again, this relates to the Morningstar part of what we might do. And here on the published dashboards, the third one down, looking for ideas for smaller companies, click on Best Small Company Funds. And what you find here is people who seem to know what they're doing. In this case, any one of these top three, either Buffalo Small Cap, Bridgeway, or Wasatch, these guys are all good. I mean, I've met the people who run these funds. I think the world of the guy who runs this one. The main guy is a guy by the name of Kent Gasaway, and he thinks and talks just like us. What we're actually seeing here is about 10 years, almost 11 years ago, $100 invested in Buffalo Small Cap is now worth $400. And again, compared to some of the other things, including just the small cap index, pretty strong performance. So the ticker symbol for it is BUFSX, BUFSX. And what we want to do is jump over to Morningstar and enter BUFSX. And many of you are already familiar with this one because we have written about it in the past as a source of ideas. And we're in the Buffalo Small Cap Fund. You can see that there's a bit of turbulence there, but that's fine. There's always going to be turbulence with the smaller companies. Going to click into portfolio, and then what I want to do is go into, I'm going to click on, I actually have a subscription, I'm going to click on premium details and then go down to then click into holdings. And what we're looking for here is a pretty simple concept, and the concept is here's the top 25. We can actually look at all 57 or 59 holdings that they have. we're looking for situations where Kent Gasaway and his team have been adding to companies, or on the other side, eliminating some shares. In the case here, you can see they're selling off some New Star. They have added a little bit to Adtran, so that Adtran could be a company to take a closer look at. Again, this is somebody who seems to know what they're doing in the small cap. If you're an investor or you're holding shares of Manhattan Associates, you might notice that Kent and his team have actually cut back on their position there a little bit. Let me go up and grab premium again so we can go just a little bit deeper into the fund. Same type of thing. We'll go back to basic here, but what we're allowed to do here is go a little bit deeper into the portfolio. And a lot of times this is where you'll discover companies that are a little bit off the radar screen. We're in the second 25 here, and a lot of times libraries won't have this. You might have to actually subscribe, or some libraries do. Here's a case where Financial Engines, he's added to Financial Engines, ticker symbol FNGN. You can find some fairly interesting companies down here. ACI Worldwide, Ancestry.com, that showed up on that Forbes list that we just had up there a few minutes ago. Pretty substantial pickup of Ancestry.com. What else has he got? I thought I saw Capella. Well, he hasn't added to Capella. I was hopeful. But some companies that may be a little bit off the radar screen down here. Pretty strong position opened up in OpNet. So again, you can look specifically at somebody who has demonstrated they know what they're doing in the world of small company investing. You can take this concept to just about anything, whether it's banks or international or that sort of thing. You can shop from within the portfolio, so you can use the Morningstar fund holdings as a place to get some ideas. It's clearly one of my favorites and an area that we'll be playing in a little bit more. Although, frankly, the small cap companies, the smaller companies have had quite a strong run. And you can actually prove that by taking a look at the, let's go ahead and take a look at the dashboard for, we go into our funds. And here's how I know that they've been doing pretty well. If we go into Kent's fund, what you'll find is a fairly subdued overall return. And notice that a lot of these aren't very sexy. Their projected returns are just not that high. Here's an exception. There's a good study for you. WMS Industries. They are in gambling or gaming, but a company that still relatively small, but with some fairly strong characteristics there. So there's an example of using Manifest from the same way that you use Morningstar to spot potential strength or areas to explore in a little bit more detail. Gentex. Gentex has really been kind of damaged here lately, and it could be interesting. You can see Manhattan that we were just talking about, relatively low return. Might think about unloading some of that. Any other questions or comments out there? Let me see. Coming up on roughly an hour. See if anybody's got their hands up. If anybody has any questions or would like to see a little bit deeper dive into a certain area. Part of the, I see John Kimmel's got his hand up. John, I'm going to unmute you. Go ahead, John.
Mark, I've got several questions, but some of them you might want to, if you're recording this, some of them you might want to save till the after-hours session or something like that.
Okay.
Should we wait a little bit?
Fire away. We've got, it's only...
Well, yeah, just when you come to some of the funds and the ETFs, I think I mentioned before, the EEM is one of the most popular emerging markets ETFs, but you've got listed an ADRE, and I'm just wondering if there's not enough holdings showing up in there, but as I look in Yahoo Finance, I'm seeing a bunch of the foreign symbols for it, and yet we do have some ADRs and some other symbols that would why they list the foreign holdings. Maybe that's what the fund holds, but there are equivalents that could come in there. Yeah, so you see the EEM. You know, China Mobile is CHL. You've got, I would think maybe Samsung would have symbol. Gazprom, I saw a symbol for it. I can't remember exactly whether it was GAZP or, but Taiwan Semi is TSM. They've listed the one on the Taiwan exchange, which obviously you're not picking up from the foreign exchange.
Yeah.
Any other number of things, Valet and Petrobras, and this would have American symbols.
Right. You're breaking up a little bit, John, but yeah, this is an area that we have actually made some adjustments. The automated update process that we had implemented across for all of our funds, we had to actually turn that off on many of the international funds because, as you can see here, there's a real serious ticker mismatch. You know, take a look at Canuck. That's the ticker symbol for that is actually CEO on the American exchange, and all of those companies actually get blown away on the updates. So we had to actually switch to manual updates on these. So we have to go back and repair some of those. Now, some of the ETFs or funds, we're going to have to go to a macro approach on them. For example, you know, you might be looking at a Uganda ETF. It's really tough to cover that one except from a macro standpoint, the same type of coverage and process that we'll be using for the bond funds. So we will have some of those. You know, one that somebody has pushed us into is Indonesia. As even if we can't cover the companies, we can probably cover the ETF. So,
right.
So we will be doing a little bit more of that.
Well, and another big topic in the foreign area is the Chinese stocks, and a couple of questions there. Are the quality numbers necessarily believable? Does state-owned versus non-state-owned have an effect on what you're looking at with some of those? And a couple of them that we have that have very high pars right now, you know, is there any evidence technically that you see of an inflection point or something like that? I know I'm not the only one interested in that, but I guess for an extended study, one might look at the accounting and the auditors,
yeah,
whether they're reputable auditors for some of the firms.
Well, it's an excellent point. You actually, boy, you talk about a softball or a beach ball question. Yeah, the reason some of those are where they're at is because people don't trust them. And you know, basically the small companies, here's my nutshell. I'll give you the 30-second version. I think it's okay to invest in the Chinese companies that are large enough that they can't be manipulated and messed with. I think what we've learned over here over the last couple of years is that companies like Advanced Battery and a couple others that you've seen me pontificate about, they're just too small. It means that people can do really nasty things to them. And believe it or not, there are people out there that are kind of evil about that kind of stuff. So my viewpoint on the Chinese companies is that, in fact, Kramer says the same thing. You should stick to the larger ones because it's just a little bit more difficult to be messed with.
Well, and we've seen that in the hogs with the insider trading charges recently and that type of thing. But C-Trip, for example, is a huge company, over 10,000 employees. Now, I mean, that would be big here, relatively big here, but in China, obviously, with their population, maybe it's still not so big. I don't know.
Yeah, and you can only go with the general classification. Baidu's obviously a relatively large company, C-Trip or whatever. Let's go ahead. Ann Newman has asked for us to actually demonstrate a little bit more of inputting on screening. We can certainly do that. I'm going to go back to the StockSearch. And we can actually demonstrate a little bit more about the screening. And in this case, what we'll demonstrate is just the search for companies that are within the sweet spot. If you click on the yes, we're going to get companies from all industries and sectors. Clicking on yes, let's search for only excellent quality companies in the top quintile. Let's really tighten and look for only A+ financial strength companies, just for sake of doing that sort of thing. Let's search for straight lines on visual analysis, which would be 75 and above, and let's see what that gives us. And that gives us a list of, got to move a thing on the screen here, 17 companies. Let's take a closer look at what it gave us. And I think you can see some fairly interesting candidates for study there. Some of those are economically sensitive type things. Masimo's come up a few times. Knight Transportation, KNX. Some fairly interesting companies, so you can search on that. If you want to search for smaller companies at Manifest Investing, simply put a 12 in there and search for 12% and growth and higher, and that'll knock the list down to 1. AeroVironment, in this case, was the only company on that list that would qualify as a relatively small company. So you can actually search for smaller companies. Let's go back and take a look at and you can refine your search results and all that kind of stuff by over here by revising and that sort of thing. If you wanted to, as we've demonstrated a few times at our dashboard diagnostic sessions, if you wanted to search within certain sectors, let's say you were loaded up on technology and you wanted to search amongst, and you had enough financials in there, you could literally just click on those sectors that you want to do. Let's still do the sweet spot, but in this case, let's not limit it to anything other than small companies that are in the sweet spot that are not in technology and a couple of the other sectors. And in this case, we'll get a lot of companies. Let's see how many we got here. 39 companies, all relatively small. Now notice that we've allowed some of the real the noise to come in, the low quality companies. So again, what you can go back and do, let's go back and revise and say, okay, I forgot quality. I think I still want high quality companies. Put that in and hit search again. And our 39 or 49, whatever it was, will now be 12. 12 companies in the sweet spot, growing at 12% or more. Now some of those are going to be bumpy. Future fuel, I have no idea. Future fuel is going to be a little bit bumpier, but that's basically how you do that sort of thing. I'm being asked to put the last slide up for a minute. And by the way, all of these slides are available in the Manifest forum underneath stocks here in a few minutes. Jeff Traeger's asking, can you specifically exclude sectors or industries such as financial services? Yes, you just have to do what I was just demonstrating. Did you want me to show more than that, Jeff, or not? I mean, you can literally go in and say, okay, but I don't want, let's say I want financials and I don't want healthcare, just literally flopping around amongst sectors. And you can see that we've switched to looking at those different sectors there. Now, one of the other things that I do like to do, let's do a new stock search. We'll do a little bit broader screen on industry rank, the top 2%, but I also like to give the caps people some credit. We're going to be looking for the best of the best, the top 50 or so, but only the ones, in fact, I'm going to use 5, only ones that have basically a buy rating from the caps people. And let's see what we get. And I think it's a relatively short list, 12 companies. These would be 12 companies that that look pretty good from the perspective of our quality and projected return, and the sentiment is favorable based on the number of successful stock pickers over there and basically giving them a buy rating over at the Motley Fool caps. So this could be an interesting area. Notice Indonesia is on there. We were just talking about that. So with that, again, this presentation, the PowerPoint will be there. The archived recording of this should be available within the next day or so. So you'll have that. If you want copies sent to you, here is my contact information, email address there. If you're a Twitter person, you can actually follow me at Manifest Invest. We also post stuff there all the time. You can see things in progress. And with that, I'll stick around for a few minutes, but I'm just going to go ahead and say thank you. We'll continue Q&A, but we'll go ahead and shut down the recording. And again, the floor will be open for any questions and comments that any of you guys want to give on this session or any of the sessions today. But for now, thanks, and have a great weekend out there.